We don't want to have any future president ever sabotage our economy with out-of-control regulations as the last two Democrat presidents have done. They went crazy. Last week, I signed an order revoking Joe Biden's destructive artificial intelligence regulations so that AI companies can once again focus on being the best, not just being the most woke. And today and over the last couple of days, I've been reading about China and some of the companies in China, one in particular, coming up with a faster method of AI and much less expensive method. And that's good because you don't have to spend this much money. I view that as a positive, as an asset. So I really think if it's fact and if it's true, and nobody really knows if it is, but I view that as a positive because you'll be doing that too. So you won't be spending as much and you'll get the same result, hopefully. The release of DeepSeek AI from a Chinese company should be a wake-up call for our industries that we need to be laser-focused on competing to win because we have the greatest scientists in the world. Even Chinese leadership told me that. They said, you have the most brilliant scientists in the world in Seattle and various places. But Silicon Valley, they said, there's nobody like those people. This is very unusual when you hear a DeepSeek, when you hear somebody come up with something. We always have the ideas. We're always first. So I would say that's a positive. That could be very much a positive development. So instead of spending billions and billions, you'll spend less and you'll come up with, hopefully, the same solution. Under the Trump administration, we're going to unleash our tech companies and we're going to dominate the future like never before. And finally, we need to work together on a defense bill that once again fully rebuilds our military for our great warriors. We have to have a strong, strong defense.
Donald Trump has come out recently with a shocking, yet hopeful announcement to all Nvidia holders. While others danced alongside the bull market that started with Donald Trump presidency, Nvidia struggled to find its cadence, particularly amid the rise of the Chinese AI chatbot DeepSeek and swirling tariff talks. But with all the recent talk from Trump himself, he may have been planning something huge to boost Nvidia further and support it. What is it that Nvidia can benefit from? Only one way to find out. Welcome back, everyone, to Investocracy.
This is an executive order. Discharges your Secretary of the Treasury, Scott Bessent, and your Secretary of Commerce, Howard Lutnick, to begin a process that will hopefully result in the creation of an American sovereign wealth fund.
It's a very exciting event. We're going to have a sovereign wealth fund, which we've never had. We have a lot of things that create wealth, and you're seeing that over the last 2 weeks. I think we've created more wealth. Other people have created de-wealth, the people, my predecessors. We're creating a lot of wealth. Scott, maybe you'd like to say something about it, and I'd ask also Howard to say something about it.
Yes, sir, this is very exciting. We're going to stand this thing up within the next 12 months. We're going to monetize the asset side of the U.S. balance sheet for the American people. We're going to put the assets to work, and I think it's going to be very exciting. We're going to study best practices as done around the world. It'll be a combination of liquid assets, assets that we have in this country as we work to bring them out for the American people.
The extraordinary size and scale of the U.S. government and the business it does with companies should create value for American citizens. If we are going to buy 2 billion COVID vaccines, maybe we should have some warrants and some equity in these companies and have that grow for the help of the American people. So I bring all these things together. I think Scott and I will create an amazing sovereign wealth fund for you, sir.
So other countries have sovereign wealth funds, and they're much smaller countries, and they're not the United States. We have tremendous potential in this country, tremendous. You're seeing that, what's happened just in a short period of time. And as an example, TikTok, we're going to be doing something perhaps with TikTok, and perhaps not. If we make the right deal, we'll do it, otherwise we won't. But I have the right to do that, and we might put that in the sovereign wealth fund, whatever we make, or if we do a partnership with very wealthy people, a lot of options, but we could put that as an example in the fund, and we have a lot of other things that we could put in the fund. And I think in a short period of time, we'd have one of the biggest funds. And some of them are pretty large, I must tell you. Some of the, like the Saudi Arabia fund is on the large side, but eventually we'll catch it. But we're going to create a lot of wealth for the fund, and I think it's about time that this country had a sovereign wealth fund, and these two gentlemen and some others are going to work with them very closely, and they'll be heading it up, and they're going to do a great job. Two highly respected people that have done unbelievably well in the world, in the real world. So that's a big deal, huh?
Yes, sir. I think it's going to create value and be of great strategic importance.
It's no secret that when paths converge at the mighty crossroads of technology and politics, tensions can quickly amplify. The Trump put is a captivating theory where the market bettors believe President Trump will shield Wall Street, viewing its performance as a testament to his economic strategies. This unwritten policy suggests limited downside risks for the stock market, and especially Nvidia, who is spearheading the new AI age. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
Wall Street spent the last week fretting about whether he'll really try to follow through with the less market-friendly aspects of the agenda. You know what comes to mind there? Major import tariffs. There's been a lot of speculation if he'll really be able to follow through, or maybe this is just a negotiating tactic with our trading partners. Call it the art of the deal. Or how much damage these plans could do to the global economy and the stock market. I say let's put the speculation aside for the moment and think about what we already know. Because we know how the stock market reacts when the Trump administration rolls out new tariffs and launches a trade war with China, even if what we saw in the first term was less aggressive than what he's proposing right now. That's why tonight we're going off the charts with the help of Jessica Inskip, the first woman on the active trader desk at Fidelity, who's now director of investor research at stockbrokers.com, as well as the co-host and founder of the Market Maker podcast. Because we want to get a better sense of the history here and what it means for the president without any emotions involved. As Mark Twain put it, history doesn't repeat itself, but it often rhymes. You know, I kind of like that more than that Karl Marx line about how history repeats itself versus tragedy than as farce. As far as Inskip sees it, even if history doesn't repeat directly, or even rhyme for that matter, it certainly echoes. So it's worth listening to the echoes of past Trump tariff actions to find out where we might be headed. First, take a look at a chart. This is a weekly chart of the S&P 500 from late 2014 through the very beginning of 2018. Now, the Obama administration actually tried to sanction a Chinese telco company in 2016 called ZTE, briefly prohibiting American companies from selling goods or service to them without a license. But they quickly backed down. In response, the stock market kept chugging along. But once Trump came in, we started an investigation of China's unfair trade practices for technology and intellectual property rights. Then he orders an investigation of Chinese dumping of steel and aluminum. Basically, they subsidize the stuff, and then their producers undercut us on price, crushing our own manufacturers. This has just been a constant pattern. By October 2017, the U.S. International Trade Commission was recommending safeguards to protect solar panels from Chinese dumping. So you can see this is a period of halcyon. We pull back from the ZTE, but then we go right forward. This was all the build-up to the trade war, and it didn't seem to have much of an impact on the averages. Even though the Federal Reserve was gradually raising interest rates during this period, Inskip says that the S&P 500 was still in a bullish trading cycle, with the 13-week, 26-week, and 40-week moving averages trending in the right direction. Remember, she likes these time frames because they represent one, 2, and 3 quarters, respectively. And we know we think about quarters on Wall Street. Now, let's take a look at this next chart. Check out the action in the S&P from mid-2017 through the very beginning of 2020. This is where we start to get the real tariff action from the first Trump administration. As Inskip points out, things get a lot more volatile, don't they? Trump imposed tariffs on steel, aluminum, solar panels, and washing machines, among other goods. All these helped the industries in question, but the broader market didn't like that we were triggering a global trade war. Sure enough, between January 22nd of 2018, and December 24th of 2018, the S&P 500 lost 18% of its value, all right? Of course, some of that's because the Fed got much more aggressive about raising interest rates during this period, taking them up 100 basis points that year. But it definitely wasn't just the Fed. You can see from the chart that virtually every time we got more tariffs, the S&P would roll over. Every time China retaliated, we'd sell off. So you're looking at this. All right. Of course, once the Fed decided to stop tightening at the very end of 2018, the S&P was finally able to find a floor at the 200. This is the 200-week moving average. You see that's the intersection of the floor.
Nvidia also faced fierce headwinds from prior restrictions on chip exports. Under Biden's era, these constraints began to expand, rattling Nvidia's hopeful sales with stricter, country-specific rules. The former Commerce Department's proposal could call for Nvidia to initiate a compelling case with President Trump, who ultimately holds the pivotal decision on looming export restrictions. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
According to Inskip, that catalyzed a bullish trading cycle, one that continued until COVID hit in 2020. Long story short, the market couldn't handle the trade war when the Fed was tightening. But as soon as the Fed started easing, well, those losses evaporated. What does this mean for the present? Let's take a look at a weekly chart of the S&P going back to October of 2023, unlike 2017 and 2018. The Fed is now our friend, creating a much more benign environment for the bulls, okay? Of course, we know from back then that Trump used tariffs as a bartering tool, with the averages selling off sharply nearly every time some new tariff threat materialized. But as soon as the Fed stopped tightening, okay, as soon as it stopped tightening, the market stopped reacting as aggressively to the trade war. The Fed was in play, not the trade war. As Inskip sees it, something like a trade war can certainly hurt us badly when the market's already trending bearishly. But if we got a bullish trading cycle like we do right now, then she's not worried as long as we can maintain that cycle. Right now, Inskip notes that the S&P 500 is very much in bull mode, supported by key technical indicators. It found a floor of support on Election Day at the 13-week moving average, triggering a short-term rally. The 13-week, 26-week, and 40-week moving averages are all acting as strong support levels. Even if we get a big breakdown from here, Inskip thinks we have a very strong floor at 5757. As long as that level holds, the bullish trading cycle remains intact. Wow. In that case, she's betting the S&P can digest the damage from a trade war, in large part because the Fed's our friend right now. When the Fed's your friend, it's easy for the bulls to sweep all sorts of negatives, including tariffs, under the rug. Finally, what about short-term catalysts? All right, Cramer fave, Nvidia reports tomorrow after the close. So check out the weekly chart of Nvidia going back to October of 2023. Pretty dispositive.
Betting on Nvidia's trajectory involves harmonizing geopolitical strings with contrasting technological symphony. Recent chip sales challenges have only spurred Nvidia to innovate and expand horizons. Analysts are carefully eyeing its every move, with forecasts nudging towards potential recovery and growth, especially if the Trump administration caressed Trump put genuinely cushions its descent. But what do you think? Share your thoughts. Finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.